What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. Make sure you hit that like button if you haven't already. It really helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, make sure you hit that subscribe and notification button as well. That way you are alerted when we release new videos, and we do drop bonus content from time to time. Now, the nightly and weekend videos, like tonight's video, we mostly focus on identifying triggers and targets for trades ranging from scalps and intraday trades, all the way up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the broadening formations, levels of support and resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you want more information about the STRAT, which is the base of our charting and trading method, there is a link to a free quick reference PDF in the description of this video, so make sure you check that out as well. So I do encourage you to watch the full video. We do talk about short-term triggers and targets, but we give some insight into price action on all time frames. So with that, let's go ahead and look at the agenda. First, we'll go ahead and recap the price action from Friday, January 30th. Then we'll zoom out like we always do and look at the week, month, quarter, and year price action. Then we will talk about the market maker's expected move for the week of February 6th before we zoom back in and set our 4-hour markers and the triggers and targets for Monday, February 2nd, the week of February 6th, and the month of February, a new month coming up. But we'll also do a quick review of the triggers and targets for the quarter and the year as well. So let's go ahead and take a look at the charts, starting off with the 5-minute chart like we always do. This allows us to take advantage of our proven and repeatable strategy that is looking for higher lows at or above opening print or the opening traded price. If we get higher lows at or above that opening print, we want to look to get into calls. If we get lower highs at or below the opening print, then we want to look to get into puts. Yesterday we talked about using a little bit of nuance, and even if the lower high isn't exactly at or right under the price level, there is an opportunity to take a little higher risk play, but you obviously need to keep track of your risk to reward and make sure you don't let things run too far in the opposite direction. Stay firm to your lower high, higher low type of commitments, and you should be all right. The reason why I bring that up is because today offered another opportunity for that nuance, right? So this was the end of yesterday over here, or the end of Thursday, I should say, over here in the upper left-hand part of the page. And you can see that push at the end of the day gave us that 2-up candle that finished the day. We opened on Friday with essentially a 2 down, right? So there's your 2 down, and not only was it a 2 down, it was a lower low. Here is the previous low from the end of Thursday, and we obviously went below that, right? Not only did we go below that low, we pushed up and we made a lower high. Therefore, we should be starting a downtrend on the 5-minute. Okay, so if you went ahead and entered on the next candle, which broke below the low of this last 2 up, right, setting this as a lower high, right, this would be your entry point. If you entered here, you got the push down, you got another little push up, this bearish engulfing candle, so a soft lower high, and then we pushed down, continued to push down, and made a lower low. Okay, so the trend is staying set on the downside on the 5-minute. We had this push up, this lower high, lower low, but then we went and made a higher high, right? So the bounce was off essentially the opening print, or just below opening print, which happened to line up with last week's high, that 66.96 level, right? There's also this 15-minute broadening formation coming through here, the bottom of it, right? So here's the broadening formation on the 15-minute from the end of Thursday. So there was the opportunity to pop back in, right? Just kind of catch this, poke below it. This would be a wick on a higher time frame. Catch the 15-minute broadening formation and bounce back up. There's that opportunity there. So if you did enter up here, that would be the exit right here. If we're going strictly by the book, right? Once we made the higher high, we're no longer in a downtrend. At worst, we're in a broadening formation, or I'm sorry, at worst, it's at least a broadening formation at that point, right? We've got the high to, let's get the right tools out here. So we've got this high to this high, and we've got this low to this low, right? So we've got another 15-minute broadening formation. Now, the one thing you want to take a look at is that upper broadening formation is kind of flat. It's not very angled up. in comparison to the angle of the bottom broadening formations. That would, kind of lend itself to, okay, we're leaning down. We're starting to push down a little bit. So that would have been the trigger to to get out of the puts. We personally did not get into those puts. Definitely thought hard about doing it, but just seeing where this broadening formation was last week's high, which could be a level of support. Opening print was right here. We wanted to see how it managed this level. There were too many factors for us at this level. So we did get that higher low, but it did in fact push down, make a soft lower high, and then a lower low. Right here's this low, soft lower high. Lower high, and then we made a lower low compared to this low. Now you could have entered here, right? We waited, right? But there would have been nothing wrong with you entering here. We waited until we pushed down, bounced off the market maker's expected move low, pushed back up, but then rejected off the bottom of the opening print. And there's your lower high at or below opening print. We went ahead and entered here. Once the next candle broke below this candle, we were able to get the lower low. All right, so now we're continuing the downtrend. We got the lower high, lower low, lower high, lower low, lower high, lower low, all the way down to previous low a day. Now, if you pay attention, if you watch this channel, you know that is the final target for that particular play that you enter off of the opening print, right? It's the overnight low and previous low a day are the targets. Now, again, if we hit those targets and we have continued momentum, we can take a look at our notes and take a look at what the targets are on the 4-hour and the day chart, things of that nature, and we can continue to stay in those trades if we want to. But we saw how we bounced off of this previous low a day, which was also the top of the gap. And we've talked about in the past how tops and bottoms of gaps can be bounce points. And all we had to do is look at the previous day. We had that big flush and then bounced, which created this 15-minute broadening formation. So, this hour broadening formation. So we bounced off the top of that gap. Remember, we said intraday, there are bounce points, but the next day we can come back and fill them. Well, just in case we weren't going to fill it, we took profit on half of our position here. Here. We got the lower high. We pushed down. We made a lower low. We peaked into the gap. But then we made another broadening formation, right? We went and made a higher high. So here's our broadening formation. And if we look at that, now we've got a little bit more evenly distributed broadening formation. And actually the angle of the upper broadening formation is a bit steeper than the lower broadening formation. So that would kind of tell us, okay, we're flattening out here and there's a possibility that we could bounce. So we took profit on 50% of our position here. We got the lower high, but we had our stop set up here at the the lower high, so that if we broke it, creating a broadening formation, we went ahead and sold. So we sold the rest of our position here. So not a lot lost there. Now, the other thing that we did was, while this was happening around this opening print, we were looking at internals. Internals were, neutral at best. In terms of breadth, they were very negative. So we did also line up the sell of a call for next week. I think it was a 74. Yeah, we sold a $74 call. 74.21 is the all-time high. So there was plenty of open interest at that level, decent premium, and it was for the next week. And that was just kind of like another little insurance play, another way to earn a little bit of money, because if you were participating today in the downside or just at all, the spreads on SOXL contracts were pretty ridiculous. Just looking up and down the chain didn't matter whether you were at the money, in the money, 30 to 60 cents, spread on all those contracts. So when looking at the sell side of things, especially, far enough out at 75, we were able to find, a better spread, right? I think it was like 15 cent spread. So again, we could have went a little bit heavier with that, but if you follow this channel, we don't trade heavy on Fridays, just pure preference. Not saying that nothing happens on Friday. You can see what happened today. What's a 12% drop, but we just frankly like to start our weekends early. So after putting in a long, hard week of work, which is more than 8 hours a day, just looking at charts and putting together plans. SOXL is not the only thing we trade. So we like to take the second half of Friday off, regardless of the situation. So this second little bounce here where we got the higher high actually played in perfectly with us. It was just before 1 o'clock. So, after we sold that position, we also sold bought back the call at, I don't know. I think we had made like 75% or something like that on the contract. It was 60 to 70%, 75%, just depended on what the mid price was on that premium. And our day was done, right? So, obviously we could have definitely put more contracts in the mix. We only had a few put contracts. Again, that spread was crazy. So, wanted to manage our risk to reward. So don't trade as heavy. And so we only had a few of those put contracts, but we did have the one sell contract, and, we had a great day today, especially for how light we were trading. Now, could we have held those puts, and watched, for the lower high on the 15 or the 1 hour or whatever, and continued to, keep those into the the gap close and see how much further it could go? We definitely could have, but that's just not the way that we trade. So if you did stay in and you made further money, we definitely applaud you, and we're glad that you were able to see some more profit there. So that's what we had for the day intraday. If we on a short time frame perspective, let's go ahead and bring up the 1 hour. There we go. So we can see, right, we got the lower high here, we got the high, lower low. So we had that broadening formation. We went high to higher high, low to lower low. We had this hourly broadening formation. We pushed up, got a little bit above 50% of that broadening formation, rejected or fell out, got this lower high here, and we came back down all the way to the hourly broadening formation, and we're seeing a little bit of a bounce there. I'm not saying we're going to bounce back up to the top of the broadening formation, but you can see we hit that broadening formation, and made a little bit of a bounce there. So 1 hour perspective, I mentioned that was going to be the key. If you watched yesterday's video, I said watch the 1 hour, and we opened going basically locking in a lower high. So even without a trigger on a 5 minute or 15 minute, you could have just went ahead and taken that trigger, right? Lower high on the 1 hour, setting the downtrend on the 1 hour, and you can see we've made a lower low. So even if we do get this bounce, we've still got to be on the lookout for a lower high, because we have started a downtrend on the 1 hour, right? Looking at the 4 hour, right, it's starting to spill over into the 4 hour as well. A little bit cleaner chart for us here. There we go. Right, so we've got our high. We've got this soft higher low here. Obviously broke through that today. Another, I'd like to call it a soft higher low, but it is a decent higher low here. But I really call, the top of this gap here at 57, the line in the sand, as far as making the lower low on the 4 hour, which also I believe plays in on the 1 day. Actually, no, this is a solid higher low. Okay, so I take that back. If we do go below here, we do have that lower low, but again, we're coming from a higher high in the trend count. We're just making a broadening formation, right? If we do fill the gap and bounce there and push up, right, we've just got a broadening formation. So it's not the end of the world. Have I changed my tone on, short term up through the 1 day, possibly even, I don't even want to say week yet. Yeah, I have. Well, actually, not really, because it's been the week and up that I'm bullish, right? And anything below, the day I've been definitely more bullish, neutral to bullish leaning over the past few days. But anything under the day, I have been saying, we've got to watch both sides of the equation, which is why we put triggers and targets out there for both sides of the equation. But I am now starting to lean a little bit more bearish, definitely on the 4 hour side, a little bit more on the 1 day side as well. Monday will tell a lot. If we go make a lower low on Monday, okay, I'm definitely at a neutral stance. I'm not switching to bullish. I mean bearish. Don't get me wrong. We were only neutral at that point, right? We've got this end of the year range that we were in, all right here, and we popped out, right? So even if we do close this gap, make a lower low on the day, it's not doing anything on the week really, right? And it's just coming back down to test this breakout area as new support, right? It was resistance, 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 a little bit more resistance. Okay, we broke out. Now do we come back down, especially on the weekly time frame? Because this was a bit of a breakout and retest, but that was on the day, right? Not on the week. If we pull up this week, it's a total different picture. Let's get it. Oops, clear chart here. It's a different picture, right? Yes, we do have this inverted hammer. It's a pretty bad looking shooter if we're looking at just the candle. But there are some positives to bring out of it, which keeps me neutral, right? It's green. We finished above where we closed, right? We closed above where we closed the previous week. The low is higher than the low of the previous week. The high is higher than the high of the previous week, right? This would be a little bit different picture if this candle was red, right? So it's, again, not the end of the world, and we can come all the way down here. Soft lower high right here. Sorry, get my words with it. Soft higher low right here at 42-ish area, and then the solid higher low here around that 35 area. That's where, you know, we can pull back to, and frankly, it's not the end of the world, right? And right, really, if we're going to continue to push through the end of the year, or this year, we're not nowhere close to the end of the year, but if we're going to push this year, continue to push up, hit that all-time high, get into blue sky territories, we got to have a little bit of pullback at some point, right? You can't just go straight up forever. So do we pull back next week? I don't know. And if you know this channel, that's not what we do. We don't make predictions. Is there a pretty good probability that we do? Yeah, there is. We hit this monthly broadening formation right here. 1 week, popped up a little bit above it. The next week, still closed below it. Popped up above it. The next week, still closed below it, right? So we've got that broadening formation. We've got the 200 fib extension of the April bull flag, April low bull flag, right? Here's the April low. Here's the flag pole. Here's the flag. And there's the fib extensions. We've reached that 200 fib extension on that bull flag. We've had a good run, right? So what's this? 1, 2, 3, 4, 5 straight weeks, 5 green weeks in a row, right? 1, 2, 3, 4, 5. Then we had a week of pullback. 1, 2, 3, a couple weeks of pullback, right? This gave us our new range that we were trading with at the end of the year. But 1, 2, 3, 4, 5, 6, 7, that was pretty crazy. I remember during that 7-week period, every week we were just counting it out, saying this is a 7th week in a row, because it just doesn't happen. You can go back left as far as you want. It just doesn't happen. I think there was like one other instance or 2 other instances of 5 or 6 weeks green in a row. But you know, you need some relief. Look at how overbought we are here. This is on the weekly time frame, right? You don't get overbought on the weekly time frame that often. And when you do, you get a little bit of a pullback, right? Here it was in November, had your pullback. September, had a little bit of a pullback there. That was that 1 week. But even here with this little pullback, we weren't overbought. Once we got overbought, that's when you see a little bit more of the pullback here. Overbought, a little bit more pullback. So yes, do I think we are probably in store for a larger pullback? Yes, I do. But do I think it started right now? And we're going to just immediately see continued pullback next week, just face ripping, dropouts, and just ripping all the way back to 35. No, I don't. I think it could be another situation where we now have, right, we've doubled the range that we were in at the end of the year. So if we take this, that's essentially the range that we were in, right? Let's duplicate this, and we've doubled it. And usually what happens, right? When you break out of a range, you double that range, and we've done that. So it's very reasonable to think that we could pull back to the bottom of this new range that we built to make this a new level of support, right? So don't want to get too far over our skis with puts, right? At the same time, we're not buying any new calls, right? Again, it's a game of patience, right? And it's more of an intraday game right now that you're going to be making the moves, because we're not getting a lower high on the day to signal a downtrend, or we haven't even got the lower low on lower low on the 4 hour, right, or lower high on the 4 hour. So short term, we've got some volatility, we've got some back and forth. Long term, there's nothing has broke down yet, right? It's looking weaker. Yes, I'm not saying that it's not weak, right? It's or looking weaker, right? It's looking weaker than it has in the past, but nothing has broke down yet, right? I guess I'm just on my soapbox here. That's the week. Let's look at the month chart, because we're coming to a new month, right? All-time high is the next target out here. If we're looking to the left for a previous price action, right? All-time high 74.21. Other than that, we're looking at blue sky territories, right? So just trying to keep the flow going to the upside. We do want to watch, so if we do get that big pullback and we come back into the end of last year's range, we do risk triggering this 1 2 up 2 down reversal, right? And this 1 2 up 2 down, the magnitude is not the low of the 1, but the low of the candle to the left of the 1, and then we've got a little gap below that as well that could lead to another gap, right? So got this domino effect type of situation, kind of like with what we got today. We talked about it and going over through our notes on Thursday, but we can have that domino action and get that big pullback. So just be aware of that. But as of right now, higher time frame, nothing's broken down. Same with the quarter, right? We did run the strat, so the 1 combo 2 down, combo 2 up is complete, and we don't have much else to say there as far as that the strat reversal is done. We're just back, talking about all-time highs and blue sky territory. So just take things one at a time, and just because we reach this magnitude of the strat, it doesn't mean we have to reverse and go back down, right? There's plenty of times you reach magnitude and continue on. That's how broadening formations get expanded. That's how trade ranges get expanded, right? I just want us to not get too far ahead of ourselves in trying to call a top, right? I am more than happy to play the downside, right? It's kind of what I do, right? I enjoy the downside play. I don't try and put that out there as much, because you kind of get a negative. People can kind of look at you negative, like you're just always a bear. But I love that, because you can take shorts. You can take profit from shorts and you can buy more shares, right? That's the name of the game, is buying low and selling high when it comes to shares, right? So, I frankly, I'm looking for the pullback. I would like a pullback, but I'm not going to get ahead of myself. So I don't want to put that out there for anyone else to get ahead of themselves either. So again, on the year where you did this 2 down, 2 up, it's reached magnitude. So same type of thing, right? Let's go ahead and just kind of zoom back in here. Let's take a look at the market makers expected move for the week. Let's get this chart. There we go. So to do that, and actually before we do that, I do want to look at internals, right? That's another thing that I wanted to bring up. If we look at the QQQ internals, obviously this is for, there we go. This is for, just today, and you can see breadth opened up really negative, but it did work its way up to, the top of the trend lower zone, but it was at the trend lower zone. Vol QD opened in trend lower zone and never made its way out of it. The tick, it just bounced it back and forth between trend higher and trend lower, which makes sense on a short time frame. That's where you get your volatility on the smaller time frames. But from a larger time frame perspective, this really tells the tale of the tape, right? Trend lower zone, negative 400 million. Trend lower zone, negative 1,500, right? So that's what we got from that. But if we look at this from like a let's pull up the let's do the 1 hour, and let's get just this week on here. Oops. Let's make this a little bit smaller. There we go. If we're looking at actually, let's not look at the 1 hour on the tick. Let's just look at Vol QD and actually pull up the 15. There we go. Yeah, that makes it a lot better. So this is the 15-minute, and this is the Vol QD, or basically money flowing in versus money flowing out for the Qs, right? Let's just make this bigger. All right. So we can see Monday, basically even. Tuesday had some inflows. Wednesday, basically even, but started to taper off. Thursday, big outflows. Friday, big outflows. So again, it's not the worst thing in the world. If Monday, Tuesday, Wednesday, we were all below zero line, we were all getting close to trend lower zone or in trend lower zone, that would be another issue. But it's just the last 2 days of the week. The rest of the week was flat, if not money flowing in. So again, nothing overly bearish here. If we look at, let me put this back, and we look at the market breadth here. Let's make this larger. There we go. So market breadth, right? Pretty even Monday, pretty even, and actually trend going up on Tuesday. This is a little bit different story, right? This is breadth, right? So big drop in breadth Wednesday, big drop in breadth Thursday, and then a big drop in breadth on Friday. The reason why I bring that up is because this is for QQQ, all of QQQ. SOXL or chips is just a part of QQQ. So there is a divergence that you can see between SOXL's price action and ADQD from time to time, and this is kind of one of those times. But if we're just looking at money coming in, money coming out, and just high level breadth, you can see that there's really not too much to worry about from this week's price action. It did taper off at the end of the week. I'm not going to say that it didn't, but we just got to keep our eyes out, next week to see how things are going to continue. All right. So let's go back and let's get back to talking about the market maker's expected move for the week. To do that, let's bring up our options chain. There we go. So this is just think or swim. We're looking at the options chain for next week, February 6th. And if we go over here to the right, we can see in parentheses, there's a plus or minus 8.305, right? That is the market maker's expected move, plus or minus $8.30, we'll call it 31 cents on the week, right? And they get that from looking at the the straddle on the at the money for that week. So it is based off of the options chain. And there we go, out on the chart. We went ahead and plotted it, right? So if we go to our notes, we were on our notes. There we go, come on. So, right, this is Monday, February 2nd, 231 trading days left in 2026 on Monday. Close price on Friday was 61.79. We know that the quarter and the year flip red at 45.13, but we've got a new month and a new week coming, so we don't know what's going to, are they going to be red or green? We'll get that. But here we have the expected move for the week, right? $8.30. I used $8.30. It looks like what that gives us is an expected trading range of 70.09 to 53.49 for the week of February 6th. Right, so that's all we did. We just went out here to our chart and we plotted it. Market maker's expected move high 70.09 and the low side 53.49. Right, so it gives us a good picture. Let's go back to last week, and we can see it doesn't mean it's not an end all be all level. It doesn't mean price has to reject there and just go straight back. It can kind of move sideways like it did here, just playing with the market maker's expected move high. It did reject a little bit there, was resistance there, and then was resistance there. So again, it's built off of the the options chain. So there is a method behind it, a mathematical method behind it, and about 70% of the time price stays within that range, right? So that is the market maker's expected move for this coming week. Now let's go back out to the charts and let's look at how we will attack things starting Monday morning, right? Using the proven and repeatable strategy that we use. Again, it's looking for higher lows at or above opening print and buying calls, and then looking for lower highs at or below opening print and buying puts, right? So here we have on the chart our quote unquote 4-hour markers, right? Up at the top, we've got previous high day. We just put for right now 64.61 as overnight high. Obviously that can change by the time Monday comes around. Then we've got our previous low a day at 60.29, and then we've got an imaginary overnight low at 58.54. Again, that number can change by the time Monday comes out. And then the only number that we were waiting for is the first traded price of the day, or the opening print, right? So let's say We get a little bit of a push Monday morning and we open towards the overnight high, right? Say we open here and we push up. Well, this purple dash line is last week's 50% level. Say we push up and maybe get a little rejection off of that 50% level. Maybe we even poke up above it, but then fall back through it. If we get that higher low at or above the opening print level, we want to look to get into puts. Obviously, overnight high is not going to be a target for us. Even if you were to get a perfect entry right off of opening print, that's not enough magnitude to make you any money. So previous high a day would be the ultimate target for that move. Now, again, we've got last week's 50% level. We got the 138.2 fib extension of last year's price action, all of last year's price action. We've got the market maker's expected move high, all before you get to previous high a day. So again, don't get too far over your skis if you do get into calls. We are in an hourly downtrend. It looks like we've set a lower low on the 4 hour. We've yet to set a lower high, but it does look as though the 4 hour trend is starting to turn. And with that should come the day as well. So just, remember, also we've got a 1 hour downtrend line, right? Coming right through here, right around market maker's expected move high. So even if we do get that bounce, look for resistance all the way up there until we can actually set a higher low on like the 1 hour time frame and then go set a higher high to change the trend. We don't want to go too far over our skis with those calls, right? Now on the downside, if we open and we push down, maybe we bounce off of this broadening formation and come back up, but we get that lower high at or below opening print, we want to get into puts. First target being previous low a day. Second target being overnight low. Excuse me. Again, previous low a day should not be too hard to hit. If we do start to go below that, look at this hourly broadening formation, last week's low, and if overnight low is around this area too, look for those to be a little bit of support, even if it is only intraday. Do look for those to be an area of support, but it could turn into a little bit of a domino situation. We've got some more gaps below and things of that nature. So, just keep an eye on things to the downside. Even if we do get that push to the upside, watch for a lower high on like the hourly time frame. Outside of this proven and repeatable strategy that we're talking about for these early entries, in the morning. If we wait around on that hour and you get the lower high on the hour, that could be the trigger to get you into the downside, right? So that's what we have from a scalping perspective. Let's go ahead and zoom out to like the 4 hour time chart. All right, and we can see here, right, we're working with a lot of resistance, right? Here's that monthly broadening formation coming through here. We pressed up against this weekly broadening formation, these daily broadening formations, right? The 138.2 fib extension of last year's price action is right here as well. So just keep an eye on that. Now, from the 4 hour perspective, if we do go to the downside, we've just got a two down continuation. There's no STRAT reversal or anything like that. We're looking at the top of the gap as a target. We've displayed in the past how tops of gaps can be bounce points, and you can see even here that was an earlier bounce point back a couple of weeks ago. So that would be our first target, and then obviously the gap close could be our ultimate target for the day, if we're not just really running market makers expected move low isn't too far below that. And we've got the 250 was it the 250 no the 150 fib extension of the April 7 bull flag right here as well that could act as support. So we've had some pretty big down days so far, but just kind of remember that, right? We're let's see, 71.98 was the high. We're already down to 60.01. We're down like 15, a little less than 15% already, right? So, we look for those 30, 40% pullbacks, maybe even 20%. We're kind of halfway there already. So we pull back a little bit more. That could be our time to bounce. So again, don't get too far over your skis with the puts as well, because we have not set those lower highs on the 4 hour, on the 1 day, on the week. Nothing has actually triggered to the downside on those higher time frames. So yeah, intraday, overnight swing, maybe a couple night swings, definitely, I'm not saying don't get puts, don't sell calls, definitely do that, make some money on the downside, but just be ready for a bounce. And then once we get that lower high, that's when we can really jump into that stuff a little bit heavier, right? So just want everybody to keep that in mind. Now, if we do go to the upside, we've got quite a bit of resistance going up, but that does give us this 2 down, 2 up reversal. Obviously entering at the high of the second 4-hour candle from Friday, and the magnitude of that move being the high of the first 4-hour candle from Friday. So that's a decent sized move there. We've got basically 65 to 70, right? So a little less than a $5 move there. And then once we do get there, if we continue to press through there with momentum, that gives us this one combo 2 down, combo 2 up. Now the magnitude's not too much higher, it's just last week's high, but it does put us in that STRAT reversal there. All right. And looking at the day chart, let's get a little cleaner chart out here. Right, we've gone 3 2 down, so it puts us in a little bit of a pickle. Right now, if we're looking at just candle structure, we've got a big solid red candle with a decent sized wick on top. Just looking at the individual candle, there's nothing bullish about it. But it's the weekend, right? Who knows what could happen? Socioeconomic or political, or just more Nvidia news or AMD news or something. There are catalysts that can happen over the weekend that can drive us back up. And technically on Monday we could go 3 2 down, 2 up. Reversal. Now again, not a lot of magnitude there. Last week's high, basically Thursday's high is the magnitude of that move, and we could stall out again there, but that is on the table. 3 2 down, 2 up. Don't know that that's going to happen. We would need a lot to happen over the weekend for that to happen, because I don't think it would trigger during the day on Monday. But we've had some big swings, so you can't take anything off the table. This is why we put triggers and targets on both sides of the equation. Now to the downside, we would just have a 2 down, 2 down continuation, looking obviously to break through this higher low here, and again attack that the gap. Again, watch for a bounce off the top of the gap, and then once the gap fills, don't expect it to go too much further. Not saying that it won't, but don't be surprised if it stops there. And I'm not saying it's going to bounce there either. We could just move sideways, right? There's an inflection point here. Here's that 150 fib extension of the April 7 bull flag as well. So just want to keep all that in mind. All right, we've looked at enough charts. Let's go back to the notes here and just look at some hard numbers, right? So again, this is for Monday, February 2nd. It will be a new week, but also a new month. We talked about the scalping perspective. We want to look for higher lows at or above opening print to get into calls. We want to look for lower highs at or below opening print to get into puts. On the 4-hour time frame, we talked about if we go to the downside, it gives us a 2 down, 2 down continuation, triggering at 60.29. No magnitude for a continuation move, only reversals. So the extended targets there we have out there are 58.68 and 57.22. Now if we go to the upside, that triggers a 2 down, 2 up. That is a reversal, giving us a clear trigger, clear exit at 69.86. But again, we are in the face of a downtrend, right? A short-term downtrend. 1 hour, definitely. 4-hour turning into. So, temper your expectations if we do go to the upside, which is why we have these intermediate levels in between, right? This is a $5 move, which is a decent sized move, right? Especially without a catalyst. If there's no catalyst and nothing to just send us $5, look at these levels here: 65.79, 67.86, and 68.95 as possible points of reversal during that push up, right? That would give us that lower high on the 4-hour that we're talking about, and it would actually start to set the downtrend on the 4-hour instead of just being in a neutral or a changing position, right? Now on the day, right, if we go to the downside, we get this 2 down, 2 down continuation. Again, no magnitude for a continuation move, only reversals. So we have the clear entry, 62.65, but we've just got these targets that we've got listed out here. And to note, right, 56.35 is the half gap we've talked about, and we've shown before in the past how intraday, at least, price can dip into the gap, and a lot of times the halfway point of the gap can be a bounce point to either push us back out of the gap or push us back up to the top of what was that gap to then have it set as a level of resistance, right? So just keep in mind 56.35 is the half gap and 55.44 is the full gap closure, right? And then we talked about on the upside, not a high percentage chance that it would happen, but there is a chance that it can happen, which is why we keep it on the board. 3 2 down, 2 up reversal can trigger at 69.86. All right, the magnitude of that move is 71.98, so not the largest magnitude in the world, but if it does push, if we've got catalysts and we've got momentum, we've got some extended targets out here, including 74.21, which should be locked into your brain, burned into your brain as the all-time high for SOXL. All right. Now on the week, oops, this is a 2 down. I don't know why that was a 3. If we go to the downside on the week, we get the 2 up, 2 down reversal. Right. Trigger at 57.22. Magnitude 52.35, decent magnitude there. It would go below what the market makers expect to go, the week to go below or go down to. So just keep that in mind. But if we do, get some type of rug pull, some type of catalyst to the downside, that is the magnitude. And then we've got our extended targets out here. Sorry, they weren't labeled right. There we go. Extended targets out here of 48 and below. All right. To the upside, if we do get that push and trigger the upside, we've got to get all the way up to 71.98, but that would trigger this 2 up continuation. So again, no magnitudes on continuations, only reversals, but it would trigger at 71.98. We got 73.15 as the first target, 74.21 the all-time high as the next target, and then we've got some extended targets from there. For the month of February, remember, we've got to keep in mind that there is a possibility for a 1, 2 up, 2 down reversal. Got to get all the way down to 45.08, right? So there's definitely work to do, but it's not impossible to get there. And if we do get there, we trigger that, and the magnitude takes you all the way down to 28.12. So because that is such a large magnitude, we do have 35.70 as an intermediate target. That is a very reasonable place that we could bounce, a place of pretty strong support on the charts. So just keep in mind, yes, we will be looking for this 28.12 to complete that strat reversal, but 35.70 would be a decent place for it to bounce. Now, if the month were to continue on to the upside, we'd have to get above 71.98 to trigger that. Again, a continuation, so no magnitude, only targets. 73.15, obviously, it shouldn't be too hard to get from a monthly perspective. Neither should all-time high 74.21. But once you hit all-time highs, you get a bunch of different factors of people, right? New money. A lot of people like to buy when they see new all-time highs or 52-week highs or whatever, for whatever reason. There'll be people trying to take profit. Things that, there'll be people attacking from both sides. So don't be surprised if we get a little bit of slowdown at that all-time high, but we do have the extended targets out here as well if we get into these blue sky territories on the monthly chart. Right now on the quarter, we're still in the quarter, not new quarter. It's a new month, but not new quarter. So we are still in this one combo 2 down, combo 2 up in force because we're above the trigger 50.76. It has reached magnitude like we talked about, but we have the extended targets out here, obviously all-time high, and then the other extended targets, some of them being fib extensions from that April 7 bull flag, right? And on the year, again, we're still in this 2 down, 2 up in force because we're above that 50.76 level. Yes, it has reached magnitude, so keep that in mind, but we do have 74.21, that all-time high, and then some extended targets out here for you as well, all right? So that is it for today's video. A little bit longer than normal. I guess I rambled on a little bit, but I just tried to jam in as much information as possible without taking up too much of your time. Apologies if it did take up too much of your time. But yeah, that's what we got for everything from a scalping perspective all the way up through the 1 year chart. I hope everybody enjoyed today's video. If you did, again, please remember to give us a thumbs up. It's free. This channel is free, so we think it would be a decent exchange, a free thumbs up for free educational video. But anyways, it really helps the channel grow, and we do appreciate those who give this a thumbs up. We also really appreciate those who leave us some comments. We like going back and forth on ideas with you all and just talking about the current situation a little bit outside of the video. So keep those comments coming. We love responding. And again, thumbs up goes a long way. A share goes even further, right? If you think there's somebody out there that could benefit from these videos, go ahead and send it to them. Let them know. Yeah, it works for SOXL, but it works for any ticker on the U.S. stock market as well. So, make sure you share it with somebody that might make trading a little bit easier for you, right? For them, right? But we'll go ahead and end the video here. If you're watching this Saturday or Sunday. We hope you get some good rest Sunday night and wake up refreshed Monday morning. If you're watching this Monday morning or Monday during the day, we hope you got some good rest Sunday night and woke up refreshed this morning. And we look forward to getting out there and trading with you.